Hello and welcome to Buying My Freedom. My name is Steven. I'm 28 years old and I'm investing for my early retirement. My goal is to retire by the age of 38, and I know that seems ambitious. It most definitely is. But I've thought a lot about my strategy. I've done a lot of projections, and I know that it most definitely is possible. However, before we get too deep into telling you a little bit more about my portfolio in the month of April, I want to give you a brief disclaimer. I am not a financial advisor. I have no formal training in finance. Everything I do and say in these videos is based on my personal opinions and should not be taken as investment advice. When making financial decisions, you should consult a licensed professional. You can lose money in the stock market. Past performance is not a guarantee of future results. And a YouTuber telling you about their finances and their personal decisions is not by default advice for you to take and run with. So without further ado, let's go ahead and get back into it, shall we? Today's date is April 3rd, 2026. Like I said in the intro, my goal is to retire by the age of 38. That goal is a long ways away, but like I said before, it definitely is possible with my strategy. But really, this video isn't about the overall strategy. This video is about updating you about my portfolio in general. So let's take a look, shall we? For those of you who saw my last portfolio update and overview, you'll recognize this page. This is my personal spreadsheet, and I've modified my portfolio a little bit since the last time we talked. I've added a couple holdings to it, and I've removed a couple holdings. And I did that because I felt like I probably hadn't looked at my holdings closely enough to be 100% sure that they were right for me. So I did some personal screening and I came out to this. So let's go through the tickers and I'll just tell you what I've got. ADP, Automatic Data Processing. This is a payroll company. BMY, this is Bristol Myers Squibb. They are a healthcare company. ES, Eversource Energy. This is a energy utility. FLO, that's Flowers Foods Inc. This is a bakery. This is my long shot bet, at least one of a couple that I've got in my portfolio now. Flowers Foods has a lot of outstanding debt right now because of an acquisition that they made a couple years ago. And there's a very big bear case against Flowers Foods. We'll see if the bears are right, but I'm really hoping that this investment pays off because it is super cheap right now for the amount of money that they're paying out. HPQ, also known as Hewlett Packard Inc. HTGC, this is Hercules Capital. They're a business development company, so they invest in other businesses. Main Street Capital, this is a bank. MRK, also known as Merck and Company. This is another healthcare company. Realty Income Corp, also known as the Monthly Dividend Company. They are a REIT, also known as a Real Estate Investment Trust. This is what I own instead of just owning real estate outright. It takes away a lot of the headache. REITs are fantastic. They're required by law to pay like 80 or 90% of their total profit to their shareholders. OMF, One Main Holdings Inc. This used to be known as One Main Financial. So that's another bank. PayX, also known as Paychex Inc. This is like ADP. They're a payroll company. PNC, another bank, very well known. SCHD, also known as the Schwab US Dividend Equity ETF. A lot of people were very down on SCHD over the last couple years, and this year it's just shot right back up, proving the thesis that Schwab had for this ETF. SWKS, also known as Skyworks Solutions. The last video, I didn't explain this one very well. They're a smaller semiconductor manufacturer. So if you're familiar with Broadcom, it's like Broadcom. Target. Everyone knows Target. This is the place where rich women go to shop and spend way too much money on things, but they pay a good dividend, so I'll take it. T. Rowe, also known as T. Rowe Price. This is the company that I invest in because not only are they a dividend aristocrat, a company that has paid and grown its dividend for 25 plus years, but also the dividend is basically paid off of people paying them fees to invest for them. So we're making money off of other people investing. It's pretty cool. T-SPY, the TAP Alpha Growth and Daily Income ETF. This is what most people would consider a safe covered call ETF. I don't know if there is such a thing as a safe covered call ETF. They're safer and more risky. So I'm opting for T-SPY as kind of my middle ground here. Covered call ETFs are a really good way to bring in a lot of money fast. That's why I'm invested in it. Vici, this is another REIT. This is a real estate investment trust that owns casinos. Week, this is the Round Hill Weekly T-Bill ETF. Treasury bills are backed by the federal government. The likelihood of treasury bills going completely tits up is extremely low. So I figure that this is probably a good conservative play to help stabilize some of my more risky choices. My most risky choice on the whole list, I decided yesterday that I was going to buy into YMAX. That is the YieldMax Universal Fund of Funds. So this ETF gives me the collective benefit of the whole YieldMax universe of covered call ETFs. So I'm not picking anything individual, I'm buying the whole group and hoping for the best. I don't know what the odds are of this actually playing in my favor, but after owning ULTY, or the Ultra Income ETF that YieldMax had, or still has, I owned ULTY last year, and it didn't work out in my favor. It didn't work out in a lot of people's favor. So I'm going to spread out my risk across their whole portfolio. And then I have a secondary portfolio here. I don't own any Bitcoin right now, but this green section down here is my Robinhood portfolio. The plan is to use T-SPY and YMAX and Robinhood to make a certain amount of money on a regular basis and use their payouts to buy Bitcoin. Then I don't have to worry about adding a bunch more money to this so that I can buy Bitcoin out of my regular paycheck. I'm going to be automating the purchases within Robinhood. It's going to be really cool. But this Robinhood portfolio is not making any sort of impact on my primary portfolio here that I have in M1 Finance. So now that I've gone over all my holdings, let's go over to the portfolio summary, because just telling you what I've got doesn't really tell you all that much. My summary is going to tell us a lot more. So over here we've got my portfolio value. Current value is $14,489.82. My current paper loss is 1.14%. Not too bad considering that the stock market has been tanking. Total capital contributed, and this has changed and may not be entirely accurate right now, just because I've made a lot of modifications to my portfolio in the last couple weeks. But based off of the information that's here, the total amount of capital I have contributed is $14,656.27. Yield on cost is currently 8.68%. The actual dividend yield for this portfolio is currently 8.58%. So not too big of a difference there. If a lot of these things stay in the red for a long time, that yield on cost is only going to continuously get better as I buy in more. The total annual payout, projected payout for my annual dividends in this portfolio is currently $1,257.07. The projected annual dividend raise for the portfolio is about 4.01%. The projected one year dividend, so April 2027, if nothing were to change, I would be earning $1,307.46, just based off of the raises that would happen naturally. If we go here into my dividend breakdown section, the estimated weekly dividend is $24.17. And you can see here that I have other ways to break down my dividend that don't really matter in any way, shape, or form, but it's fun. So, estimated daily payout $3.45. Pay by the minute, less than a penny. Shocker. Pay by the second, way less than a penny. The hourly goal, this would be getting paid 24 hours a day, is to make $9.52 an hour just for existing. The current hourly average is 14 cents just for existing. But that's still pretty cool. I don't have to do any labor to make this happen. All I have to do is buy assets and keep on going. Margin breakdown. I'm currently using a lot of margin. Almost half of my portfolio value is margin loan. So that's problematic. I really need to get that total down. Total utilized margin, you'll see my margin percentage here. That's the total amount of margin that's allowed. I'm allowed to borrow up to half of my portfolio value. And I've used 96% of that margin. So I really need to start paying that down. Yeah, that's what's going on with my portfolio. As you can see here, I basically had to restart my portfolio in July of 2025. So I've gone from zero to $14,000 in value, and it hasn't even been a year. I'm very proud of that. That's a lot of money that wouldn't otherwise be there. Hopefully, by the end of the year, I can get the value of my portfolio up to $25,000. We'll see. There's a long way to go, and I need to make it to at least that much to be on track for the 10-year plan. So that's what's going on with my portfolio in the month of April. If you have any questions, go ahead and leave those questions in the comments below. I really want to try next week to really get into like the philosophy behind dividend growth investing, just so that I can explain more about how all this stuff works. That's all I have for now. Thanks for watching and have a good day.